Hey everybody, welcome to another episode of Thought Leaders. I'm your host, Chris Shang, and today we have Ricardo, who is the CEO of SellersFi. Thank you so much for joining us, Ricardo.
Hey, Chris. Great being here. Thanks for hosting me.
Absolutely. Tell us a little bit more about SellersFi, what you guys do with companies, the whole nine.
So, SellersFi is a financial platform focused on providing working capital and payment solutions to e-commerce companies. So, we work with a wide range of merchants and platforms. Recently announced a partnership with Amazon on the working capital side. And like any startup or I'd say scale up, we're ever evolving, looking for ways to cover our clients and needs and expand our services as we see a demand from our clients.
And particularly, are there certain size or stage of company that you guys work with?
We work with a wide range of sellers from different sizes. I would say sweet spot for us, it's kind of a wide range, but we work with companies that sell anything from $100,000 a year to up to $10 million. So
Right.
it's a wide range, but we have certain products and that are developed for certain segments in the market.
Got it. Very cool. I would love to kind of like dive in a little bit more deeper around what that business model looks like. But before we do, love to kind of get a better understanding around your background before you started into entrepreneurship. Saw just kind of from your LinkedIn, you spent a lot of time in finance, as a financial advisor, investment advisor along those lines. So what was like, I mean, I guess starting from there, what with that previous chapter of your career, what drew you to the finance world in the first place? Was it security? Was it just an innate interest in the markets, or what was that in the very beginning?
It's interesting. When I was looking for, I always liked business. I mean, I started working in family-owned business. I belong to a cousin of mine when I was like weekends. I was like 12, 13 years old, and I started working with him during weekends, and I started got a sense of what owning a business means to someone. And then I come from a family of entrepreneurs, and in different segments. My great grandfather owned a bank in Brazil. Like, this is ages ago. But when I started looking at it, and when I decided to go to college in Brazil, I decided to study economics, not business, because I needed to. I wanted to have a broader view of how things relate, and I thought that business were just one aspect, but I wanted to have a more macro view. So I decided to study economics. After that, I lost my dad when it was my first semester in college. So I changed my classes to a night shift, and I started working full time.
Mm-hmm.
And that's kind of how, after 5 years, I graduated. It took me a little longer to graduate because of the challenges of accommodating classes. I was working full time, got hired by Citi. Citi then offered me a job in New York. This is back in 2000. And I was working on sales and trading, basically. During college, I worked as a treasurer for a multinational company in Brazil. Then Citi hired me to work in their trading desk, covering rates, FX, and that's how I started my career. When I left Citi in 2007. I was in charge of a JV between Citi and Salomon Smith Barney. We were covering Latin American clients. I was hired by Merrill Lynch, Bank of America, to do pretty much the same thing, but this is pre-2008 crisis. So the project fell apart. And then I was, let's say, rescued by JP Morgan. And then I spent 8 amazing years at JP Morgan. I would say like Citi, I learned a lot with Citi and JP Morgan, because even though I was working for these big organizations, I built business from the ground up. This JV that I managed at Citi, it taught me a lot, because I was literally building a team, building an entire business line from the ground up. And something similar happened in a different scale at JP Morgan, but at JP, I also learned different skills, and I learned a lot in my tenure there. The last few years, I was part of the risk management committee in the private bank, and that taught me a lot and set the foundation for what we built here at SellersFi. So it's kind of a long history, but all concentrated in financial services. And when I left JP Morgan, I wanted two things. I was doing the same thing for over 15 years, and I wanted to learn something new, something that could challenge me, but also leverage some of the experience that I had in finance. And then I found the opportunity to start SellersFi.
Got it. Very cool. And walk us through what gave you the inspiration for SellersFi in the first place, and then jumping from working for some of these larger organizations into entrepreneurship is somewhat of a big leap. So how did you build up the confidence to make that risk?
It was something that was always, like I said, it was always in my blood,
Yep.
and something that I aspired to do. When I left JP Morgan, I put some money on the side, and I said, I'm gonna have money to invest in my own business, and some savings for a couple of years, and then hopefully everything is gonna work out. So I did some projects here and there. I ended up receiving a phone call from a friend of mine who was moving his business from wholesale to Amazon. And he saw his sales quadruple in 6 months.
Mm.
And he called me and said, look, I need a CFO, or someone that will help me reorganize my finances. And I need to secure a working capital line with a bank or a provider. And I need help. So I thought, man, that it should be easy, because it's a fast growing company. They had no debt. He had no personal debt. And I thought, Amazon, everybody must understand this is a multi-billion-dollar industry, great opportunity, should be a piece of cake. It wasn't. So I went to talk to banks and had no clue how to underwrite this. And when I checked for some online lenders, they were charging extremely high rates, talking about anything from 40 to 100%
Mm.
a year when you do the math on all the fees that they charge. And I thought there must be something in between. And the only something in between that happened back then was Amazon Lending, who was charging something around like low teens to mid-teens. And we're talking, okay, if banks cannot approve you, but have access to capital, but they won't approve these guys, and will charge 7-8%. Amazon Lending charges 11 to 15%. And then you have the other online lenders charging 40, 50 or more. And there must be, if I build a platform that price something in between what banks charge and what, of course, I don't have the cost of capital that Amazon has, so I'll be more expensive than Amazon, but I don't need to charge 40%. So that was the genesis of SellersFi. We started, the first couple of guys that we hired were data scientists. I used my friend's stores to build a model that would help us underwrite and understand the risk of the applicants. And then when you fast forward, we processed over 30,000 applications. We financed 4,000 or 5,000 merchants. We have 12,000 stores connected in our platform. We disbursed over $1 billion, 1.1, 1.2 billion. And the model has been showing, constant improvement because, with AI, machine learning, we get better as we train the model. And now we announced in December, like a more meaningful partnership with Amazon, and I'm very happy with that.
Got it. And how long ago was it that you started SellersFi?
7 years ago.
Years ago. What was that initial process like? Going from somebody who's not necessarily super technical, but has the understanding of the finance acumen, to then going out and trying to build out a technical product. What was that journey like for you, specifically? And then, how long did it actually take you to come from idea to then actually take it to market?
Like I said, the first few guys that we hired were data scientists. It took us probably like 6 months to build a robust product or robust underwriting model. And then when we went to market was quite manual. It was a quite manual process. And I felt, what those movies like Boiler Room or something, like you're doing cold calling and trying to convince people to work with you. That was kind of that. It was me, my partner, a few summer interns, and we were picking up the phone, working, and then we went to a trade show. I remember being asked why two Brazilians are, building a business to finance Amazon sellers. How come you guys ended up here? And but we did, and I mean, it took us probably about a year to move from a very manual process to a more integrated and automated one. I was fortunate enough to, my partner, Fabio, co-founder, I mean, he took care of technology, client interface, and sales. And I moved to, I kept in my areas of expertise, like credit underwriting, finance, business strategy. And we divide and conquer, and we still do this till this day.
Got it. And how did you meet your co-founder?
He's the brother of my friend who owned the Amazon stores.
Got it. Got it. Interesting. What was that process like, in terms of building a relationship with him, being aligned on the idea, and just maybe from more of a logistical perspective, how did you guys, how did you go ahead and structure the business between the two of you?
Yeah, so we rely a lot on our expertise and on each other's perspective of the business from the angles and areas that we consider ourselves experts. There is one thing that probably made a lot of sense and it still makes a lot of sense for me. I mean, throughout my career, corporate career, or seeing my family's interaction with their business partners,
Hmm.
for me, it was always a struggle to respect someone if that person is not 100%. It doesn't put 100% of their energy and effort as I am putting. Like I was always struggling comparing myself with other peers, and in this case, I I have a partner, a co-founder, and someone that works as hard as me, and we naturally respect each other's boundaries and areas of expertise. So that helped a lot. That was very helpful throughout the life of our company so far.
Got it. What's been some of the different hats that you've had to take on as a founder, that you may or may not have thought that you're going to do from an expectation standpoint? And has there been any particular skill set that you picked up that you either loved or hated?
Oh, look, yeah, so many hats.
Right.
But I've always been a hands-on person. So operations for me, I mean, even today, we still have some processes that were designed when we started the company, and they're still supporting our operations. So operations was something that I was never too involved in
Hmm.
my corporate career, but I had to get my hands dirty and make things happen. And uh, in a sense, it's kind of, when you look back, as the team grew, and I mean, we have 140, 150 people now. And sometimes I hear this, some folks like complaining about it, or trying to make it more difficult than it actually is. So I'm sorry, but I already did that. That process I designed, so it's not that complicated. You
Yep.
know, those are things that you enjoy as you build your business.
Got it.
I had to learn uh, some stuff about technology and marketing that I've never been. I mean, marketing. I did my MBA at Columbia University, so I knew stuff, but like in theory, I knew marketing. But now I had to get my hands dirty and understand the KPIs and calculate cap methodology for that, LTV, and I mean, those are things that when you read in a book, I mean, or you have a case study at school, at business school, it's fine. But when
Hmm.
you have to experience and make those numbers work and talk to each other, is a different game.
Yeah, absolutely. Um, Going back into more of now, like the key business model, right? It's making loan decisions essentially for some of these what has traditionally been not um not necessarily like a quantifiable investment by banks. And so you're going in and creating this almost like a new instrument. And what's been some of the things that you've seen from like maybe a hypothesis or a thesis perspective from when you started the business, and how has that evolved over the past few years, especially as we've seen like you know things like interest rates going up and capital becoming more expensive. You have an election year this year. How does that play out to how you think about things? Obviously, these are variables that go into these types of decisions, whether they're truly quantifiable or not. Sometimes it's not as clear. But how do you think about it?
Yeah, so it's a great question, because if you look at most small business lenders, they rely a lot on FICO scores and uh, personal credit scores from the business owner. I mean, we take this into consideration, but more important than personal credit scores, we run our model is mostly based on sales performance. And the biggest challenge that you see from SME lenders, I mean, in my perspective, is the lack of high quality data that can be standardized and not corrupted by the borrower in order to process an underwriting process. And we address this by integrating with these multiple platforms that we work with. So in a sense, we have standardized data that cannot be modified by the applicant, by the borrower. And with that, we measure their sales performance and we predict their future sales and financial performance in the following 3, 6, 12 months. If you rely solely on the owner's personal credit score, especially in our industry, you fall into probably a mousetrap, because you're getting, most of our clients, they start their business selling using their personal credit scores. When they reach a certain level where they need serious money to grow and to professionalize their business, their credit score is completely impacted by the utilization rate of their credit cards. So it's not a useful indicator.
Yep.
And we learned that with time, and I think that's one of the key factors. We have on a quarterly basis a comparison of the results that we achieve from our models, our risk models, versus FICO or Vantage. And we perform way better than them.
Interesting.
And you were mentioning about the election, and because we have a risk underwriting model that is mainly driven by sales performance, anything that is related to sales or can impact consumer demand or can impact the velocity of sales or transportation costs, has an impact in our model. And I really hope that we can see rates dropping a little bit. I think that will bring some relief to some of our clients. We will be able to somehow adjust our pricing as well accordingly, so they will benefit as well. But higher rates has an impact in the entire chain, right? And some of and I was talking to I have a friend of mine who is a real estate developer here in Florida, and we were talking about the impact of these higher rates in consumer demand. And the thing is, it takes time for higher rates to impact in a more meaningful way consumer demand, because it takes time for that to impact the real estate market. In my mind, if you look at, I bought a house 3 years ago, 4 years ago. Okay, I locked my rate at a very low level. If I don't need to leave, I won't leave. I mean, in order to buy the same house now, I will pay probably 50% more.
Yeah.
And that's going to take 50% more of my monthly expenses. And the impact on consumer demand, we are starting to see now, because after 2 years of higher rates, living in a higher rate environment, people will have to move. Life changes. You have a baby, or someone dies, or your kids go to college, or stuff happen. And then after 2-3 years, you have that reason to move. So, and we are seeing now this happening, this triggering. So hopefully rates will go down, mortgage rates will go down, and we still see a healthy consumer market.
Got it. Interesting. As the last question here, as we're rounding up on time, is just, where do you imagine SellersFi to directionally be going in the next few years here, right? With especially you mentioned, talking about AI becoming a useful tool for you to start making you know, the model better by training it with more data sets and um, but how do you look at that as it relates to the core product offering? But also perhaps, are you thinking about expanding the suite of business that you guys are offering in other ways?
Hmm. I think that the the scope of our work and the way we approach our funnel in terms of client acquisition will change. The first 6 years in business, we spend money on paid media and we try to attract as many merchants to work with us. Now we have Amazon being the biggest one, but we have other partnerships that we are designing. So I see the company working more on developing embedded financial solutions for our enterprise clients, investing in AI and technology to support growth in a more scalable way. And I see the company kind of being the digital partner of financial institutions to be integrated with these e-commerce platforms
Hmm.
instead of going to market and trying to attract merchants directly to our platform. So it will be it's a slight shift, but a meaningful one, because each platform that we end up integrating with becomes a powerful and a better customer experience, because they are reaching out to us from their existing platform that they work with.
Got it. Very cool. Makes a lot of sense. On that note, I want to say thank you so much for your time and sharing with us your journey, as well as going deep on your product, what you guys do, and how you guys are doing it.
Thank you. Thanks a lot for having me.